welcome back to the deep dive. You guys seem really interested in this idea of retiring a millionaire, even if you're on like a modest income.
Yeah, it's definitely something a lot of people are thinking about.
For sure. So we're going to kind of dig into that today. And you guys sent in some good resources for this deep dive.
Yeah.
We're going to be looking at this YouTube video by Joshua Mayo called How to Retire a Millionaire on a Low Salary.
Oh.
Key title.
Yeah. And then also we'll be looking at this just fascinating story of Ronald Reed.
Yeah, I love that story.
This guy was a janitor and a gas station attendant and secretly amassed an $8 million fortune.
Yeah, it's crazy.
So we're going to kind of look at all of that today. So buckle up. It should be a fun one.
That's good.
Okay, so let's start with this Ronald Reed guy because his story is just like mind-blowing.
Yeah.
So this guy, like I said, was a janitor. He was a gas station attendant.
Right.
Lived a super modest life in Vermont.
Like how modest are we talking? Like collecting stamps, driving a used Toyota Yaris, having breakfast at Friendly's. Kind of modest.
Wow.
And when he passed away at 92,
Okay.
his friends and family discovered that he had an $8 million fortune.
I mean, that's just unbelievable. How is that even possible?
Right. It really is. So,
Yeah.
I mean, I guess the first question is, how did he do it?
Well, it really just comes down to the power of long-term investing and compound growth.
Okay.
Like, it's this kind of hidden superpower most people don't even realize they have.
So he wasn't like winning the lottery or
Oh,
anything?
no. It was smart, consistent investing over decades.
Wow.
Like, he really understood that slow and steady wins the race when it comes to building wealth.
That's incredible. I mean, it really makes you think about like the potential we all have if we make the right choices.
Absolutely. And that's where Joshua Mayo's blueprint comes in, I think.
What?
He lays out this clear 3-part plan for anyone looking to retire a millionaire, even on a low salary.
Perfect. Okay, let's dive into that blueprint then.
Sounds good.
So part one is save,
Yeah.
which seems pretty straightforward.
Yeah.
But what makes Mayo's approach different?
Well, he really emphasizes the importance of automating your savings. You know, just take the emotion and the decision-making out of it.
Yeah.
You're basically paying yourself first before you even have a chance to spend the money.
So it's more about like building a system than relying on willpower.
Exactly. Willpower is, it's limited.
Right.
We're all human.
Totally.
It's easy to get tempted to spend our money, So automating your savings just kind of takes that temptation away.
That makes a lot of sense.
Yeah.
So Mayo provides this table in his video breaking down these weekly savings targets by age to reach that $1 million goal.
Yeah.
And some of these amounts are surprisingly achievable.
They are, yeah.
Like, for example, he says that if you're in your early 30s,
Right.
if you invest just $25 per week, you could be on track to hit $1 million by retirement.
It's pretty amazing when you see it laid out like that.
Yeah, $25 a week, that's less than like a daily latte at some of these fancy coffee shops.
Exactly right. Small, consistent contributions can add up big time.
Especially, I imagine, when you factor in this compounding thing we're going to talk about later.
Exactly. Compounding is key.
But it's important to note, obviously, right, this is like a simplified example.
Sure.
Like market returns can fluctuate, right?
Oh, absolutely. There's no guarantees when it comes to investing.
Right. It's not like a guaranteed outcome or anything.
Right.
But I mean, still, it does like paint a picture of what's possible.
For sure. It gives you a framework to think about.
Yeah, exactly. And it highlights the importance of starting early, too.
No,
right?
Absolutely.
The more time you have, the more that money can grow.
The earlier, the better.
For sure. Okay, so let's move on to part 2 of Mayo's blueprint, which is invest tax advantaged.
Okay.
And he specifically talks about Roth IRAs.
Yes.
So can you maybe explain why he favors those?
Well, imagine this. You have this $1 million nest egg,
Okay.
and the IRS can't touch it.
Whoa, okay.
That's the magic of a Roth IRA.
Okay.
So you contribute after-tax dollars, and your earnings grow tax-free.
Great.
Meaning all those gains are yours to keep in retirement.
So you're not paying taxes on them when you withdraw?
Exactly. You already paid taxes on the money going in.
Gotcha. Okay. That sounds pretty amazing, especially when you're talking about like potentially having $1 million or more.
Yeah, it can make a huge difference in the long run.
What were some other key benefits of the Roth IRA?
Well, unlike a traditional IRA,
Okay.
where you get a tax deduction up front, but then you pay taxes on withdrawals in retirement.
Right.
With a Roth, you pay taxes now,
Okay.
while your income is likely lower, and then you enjoy tax-free withdrawals later on.
So it's all about like shifting your tax burden to a time when you'll likely be in a lower tax bracket.
You got it.
That's brilliant. I mean, that's really smart.
It's a powerful strategy.
So we don't know the specifics of Ronald Reed's investment strategy, but it's probably safe to assume that smart tax-efficient choices like this played a significant role in his success.
Oh, yeah. I would say that's a pretty safe bet.
Okay. I'm starting to see how all these pieces kind of fit together.
Yeah.
Now, I'm really intrigued by part 3 of the blueprint,
Okay.
which is harness compounding.
Ah, yes, the magic of compounding.
I've heard the term before, but honestly, it still feels a little bit mysterious.
Yeah, it can be a little hard to grasp at first.
So can you maybe break it down for me? Like, what is it exactly?
So think of it like a snowball rolling downhill, gathering more and more snow as it goes.
Right.
Compounding is essentially earning returns on your returns.
Okay.
So the money you invest earns interest, and then that interest earns interest, and so on and so forth, creating this exponential growth over time.
Okay, so it's not just about how much you invest,
Right.
but how long you let it grow.
Exactly. Time is your biggest ally when it comes to compounding.
Okay.
Mayo actually illustrates this with a thought-provoking question in his video. He asks, would you rather have $1 million today or a penny doubling every day for a month?
I don't know about you, but I'd probably take the $1 million up front.
Yeah, most people would, right?
Seems like a no-brainer.
But here's the kicker. The penny doubling every day for just a month would actually result in over $5 million.
Wait, seriously?
It's true. The math is kind of mind-blowing.
That's crazy.
It is. And that's the power of compounding. It might seem slow and steady at first, but the longer your money has to grow, the more dramatic the results become.
Okay, I think I'm starting to get it.
Good.
So how does this tie back to those weekly savings targets that we talked about earlier?
Right. So remember that $25 a week example for someone in their 30s?
Yes.
Well over 40 years with an average annual return of 12%, that consistent investment could potentially grow to over $1 million.
That's incredible. So even small amounts consistently invested can lead to significant wealth thanks to the power of compounding.
Precisely. And that's why starting early is so crucial. The sooner you start, the more time your money has to work its magic.
Okay, that makes a lot of sense.
But good.
So we're starting to see how saving consistently in a tax-advantaged account can really help you reach that $1 million goal.
Exactly. It's all starting to come together.
But now we need to talk about where to invest those savings to maximize that growth.
Right. We need to figure out where to put that money to work.
And Mayo is a big advocate for index funds and ETFs.
Yes. The simple but powerful approach.
So I've heard of these, but honestly, the whole world of investing can feel a bit intimidating.
Yeah, it can be a lot to take in.
So do I need to become like some kind of Wall Street guru to make this work?
Not at all. That's the beauty of index funds and ETFs.
Okay.
They kind of take the guesswork out of stock picking.
Okay.
Instead of trying to pick individual winning stocks, you're essentially investing in a basket of stocks that track a specific market index, like the S&P 500.
Okay.
You're not betting on one horse. You're spreading your bets across the entire field.
Oh, okay, that makes sense. So instead of trying to pick winners and losers, I'm just riding the overall market growth.
Exactly.
Okay, so that sounds a lot less intimidating than like day trading or something.
For sure.
What are some other benefits of index funds and ETFs?
Well, it's a built-in diversification strategy,
Okay.
which helps to reduce risk.
Mm-hmm.
Plus, they tend to have lower fees compared to actively managed funds.
Okay.
So you keep more of your returns.
So with index funds and ETFs, I can basically participate in the overall growth of the market without needing to become like a stock picking expert.
Precisely. They're a great way to build a solid foundation for your portfolio.
That's great because that was one of my biggest concerns.
I understand.
So we've talked about saving, consistently taking advantage of tax-advantaged accounts like the Roth IRA,
Right.
and investing in index funds and ETFs to ride the market growth.
Yeah.
But amidst all this talk about returns and diversification, I think it's easy to lose sight of like the most crucial element that both Mayo and Ronald Reed's story highlight.
Which is?
Patience and discipline.
Absolutely.
So retiring a millionaire is not about chasing get-rich-quick schemes
No.
or trying to time the market.
No.
It's about staying committed to a long-term plan, even when things get volatile.
It's a marathon, not a sprint.
Right, just like Ronald Reed, who diligently saved and invested for decades.
Yeah.
We need to kind of trust the process and stay the course.
You got it. And that's where a lot of people stumble.
Really?
Yeah, they get impatient, they chase short-term gains, or they let fear and market fluctuations derail their long-term plans.
It's easy to get caught up in the hype when you see all those headlines about market swings and stuff.
Oh, for sure. It's hard to stay focused when everyone else is panicking.
Right. But staying disciplined and sticking to your plan is key.
Absolutely. Your emotions are not your friend when it comes to investing.
So what else should folks keep in mind when it comes to staying on track for long-term investing success?
One of the biggest mistakes I see is letting their emotions drive their investment decisions.
Okay.
Fear and greed can lead to impulsive choices that can really hurt their portfolio in the long run.
Right.
So having a solid plan helps you stay focused on your goals and avoid making rash decisions based on market noise.
So it's all about creating a plan and trusting the process.
Exactly.
Even when things get a little bumpy.
Yeah.
It's about having that long-term vision and understanding that slow and steady wins the race.
Exactly like Ronald Reed.
Exactly like Ronald Reed.
It's inspiring.
It's so inspiring.
Just this ordinary guy living a modest life was able to achieve these extraordinary results through discipline and a long-term mindset.
It's really incredible.
But the best part, anyone can do it.
That's such a good point.
Yeah.
It's not about luck or being like a financial genius.
Right.
It's about making informed choices and staying committed to your goals.
Absolutely.
Which brings us to a really important question.
Okay, let's hear it. So what does all this mean for someone like you? Someone who dreams of retiring a millionaire.
Right, because it's clearly not about winning the lottery or inheriting a fortune.
No, it's not about luck or hitting the jackpot.
Yeah, so what is it about then?
It's about taking control of your financial future.
Okay.
And making those seemingly small but consistent choices that add up over time.
Like we've been talking about.
Exactly, like harnessing the power of compounding, making smart tax-advantaged investments, and sticking to a plan.
Yeah.
Even when the market throws you a curveball.
Right, it's about playing the long game.
Exactly.
And Ronald Reed's story is proof that it's possible.
Right.
It's incredibly inspiring to know that someone living such a simple life could achieve that level of financial success.
It really is.
So where does someone even begin?
Yeah, that's the big question.
What's a good first step?
Well, one of the most impactful things you can do is to automate a small weekly transfer to a Roth IRA. Even if it's just a small amount to start, those consistent contributions can make a huge difference over time. And then start exploring index funds and ETFs, especially after learning how they can make investing more accessible and less intimidating.
Right. And if you're feeling overwhelmed, don't hesitate to seek guidance from a financial advisor.
Oh, absolutely. There's no shame in asking for help.
For sure.
A financial advisor can help you create a personalized plan that aligns with your goals, your risk tolerance, your timeline, all of that.
So as we wrap up this deep dive into retiring a millionaire on a low salary, I want to leave you with a final thought-provoking question.
Okay, I like it.
What's your $1 million dream?
Yeah, what is it that financial freedom would allow you to do? Travel the world. Start your own business. Spend more time with loved ones.
Imagine the possibilities. And then ask yourself, what small step can you take today to start making that dream a reality?
Exactly. It could be as simple as setting up that automated transfer, reading a book about investing, or even just committing to learning more about personal finance.
So this deep dive is just the beginning of your journey.
The first step on the road to financial freedom.
Remember, the power to achieve financial freedom is within your grasp.
You have the tools.
It starts with a single step.
So take that first step, stay disciplined, and let the magic of compounding work its wonders.
Who knows? Maybe someday we'll be sharing your story of achieving millionaire status on a modest income. Until next time, keep diving deep.
It's a big question, but it's an important one.
Right. So what does all this mean for someone like you? Someone who dreams of retiring a millionaire?
Well, it's definitely not about winning the lottery.
No.
Or inheriting a fortune.
Right. It's about taking control of your own financial future.
Exactly.
Making those small but consistent choices that can really add up over time. That's what we've been talking about, harnessing the power of compounding.
Yes.
Making those smart tax-advantaged investments and sticking to a plan even when the market gets a little crazy.
You got it. It's about staying the course.
Ronald Reed's story is a perfect example of how it's possible.
Yeah, it's really inspiring, right?
It really is. I mean, it's incredible to think that someone living such a simple life could achieve that level of financial success.
Yeah, it really shows you that anyone can do it.
So where does someone even begin?
Well, that's the $1 million question.
What's a good first step?
One of the most impactful things you can do is automate a small weekly transfer to a Roth IRA.
Okay.
Even if it's just a small amount to start,
Yeah.
those consistent contributions can make a huge difference over time.
Makes sense. And then maybe start exploring index funds and ETFs.
Absolutely.
Yeah.
Especially after learning how they can make investing more accessible and less intimidating.
Right. And if you're feeling overwhelmed, don't hesitate to seek guidance from a financial advisor.
Oh, for sure. There's no shame in asking for help.
A financial advisor can help you create a personalized plan
Exactly.
that aligns with your goals,
Yeah.
your risk tolerance, your timeline, all of that stuff.
It's definitely worth considering.
So as we wrap up this deep dive, I want to leave you with one final thought-provoking question.
Okay, hit me with it.
What's your $1 million dream?
Yeah. What would financial freedom allow you to do? Travel the world, start your own business, spend more time with your family.
It's amazing to think about the possibilities.
It is.
And then ask yourself, what small step can you take today to start making that dream a reality?
Exactly. It could be as simple as setting up that automated transfer.
Yeah.
Or maybe reading a book about investing.
Totally.
Or even just committing to learning more about personal finance.
This deep dive is just the beginning of your journey.
The first step on a very exciting path.
Remember, the power to achieve financial freedom is within your grasp.
It really is. You just have to take that first step.
And stay disciplined.
Absolutely. Consistency is key.
So who knows? Maybe someday we'll be sharing your story of achieving millionaire status
That would be awesome.
on a modest income.
It's definitely possible.
Until next time, keep diving deep.
See you next time.